Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Thon of Pacific Private Money. Mark Hanf is off again today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is entertainment. And by the way, a little announcement here. Starting on December 19th, we are going to be moving to 8 p.m. on Saturday on the sister station, KTRB 860 The Answer. So everybody kind of write that down. Otherwise, you'll tune in and you'll go, where's my favorite show, The Best of Investing? They're not here. You go, well, they moved to KTRB, which is a stronger station, but it's still under the Salem Communications, so that's good.
8 p.m. though. 8 p.m. I'm in bed by 8 p.m.
Yeah, on a Saturday night.
Yeah, I'm tired. A lot of they work us really hard here at Pacific Private Money.
That's true.
Yeah.
Got a couple
so you said the trivia for today is entertainment, right?
Yes.
Okay. Well, we just had entertainment. We hosted a webinar yesterday, this week for the Pacific. Well, the family of funds, and it was really, really well received. I'll get into a few articles in just a minute, but it was interesting. We mixed it up a little bit. We, like always, talk about the various investment opportunities here at Pacific Private Money, but this week's webinar, we tried to frame it a little differently, and that's what are investors interested in terms of things like what's their aggressiveness with investing. What's typically their time frame for investing? Do they want liquidity, or do they want to invest or do they have an invest and hold strategy, or do they only want to stay invested in California real estate, or are they open to investing out of California? And all of those questions are to help us and help them really understand what the different fund options are.
Yeah.
And when we get into some of the later segments, we'll recap some of what we talked about in yesterday's session. And again, it was really well attended. We got some really good feedback and investors who say, "Wow, I'm really interested in learning about all of your funds," or "I'm currently invested in the Pacific Private Money Fund, and I'd like to explore these other funds." So we'll touch on each one of those funds in a little bit, but just starting out. Every week we do the show, and lately there's been so much activity in the last 30 days. Right? There's been several months worth of activity in the last 30 days, starting with the election results, obviously COVID being top of mind for essentially this last 6-7 months, and just the really hot real estate market, and all of those things sort of have come together over the last 30 days and have made, post-election real estate activity even stronger. So you've got the low interest rates, you've got the news about, potential vaccines coming out of Pfizer and Moderna, and it's created even more of a frenzy, it seems like. Literally in the last 10 days, the number of real estate transactions for us, the real estate loan demand, has jumped up significantly. So there's no rest for us. Everyone at the office is just tired of all of the loan activity, and people come to us for at the 11th hour for loans. So it's always a rush. It's a great problem to have. I mean, we're not complaining. We're definitely we're definitely taking advantage of all we can. We actually served lunch, had it sent to 2 of our dock and processors today because they're just so busy. They really don't have time to eat or get out and eat. So we actually sent lunch to them. So I think hopefully they're
actually hire someone to feed them too, right?
Yeah, that's right. Going around feeding them grapes and with a fan, keep them nice and cool. But the headline today, and we may go into the next segment on this, is one of them. One of the headlines is from Inman News, and what a vaccine could mean for the U.S. housing market and real estate. We talked a little bit about this last week, But between last week and now, there's more news about, Pfizer's, vaccine, and Moderna came out a few days later with their vaccine results so far. And
Chuck Schumer was talking about another COVID-19 stimulus. That talks of resuming that again. So that's going to kind of back into the public. Yep.
Yeah. So, I mean, all of that, is going to help boost public confidence. And so you're seeing that with with this article. So it could mean a spike in real estate activity, but it also could mean a spike in interest rates too. So the article says the news and effective back. What's that?
I don't know about that with the interest rates. Just they talk about keeping them low because the economy is still going to take a while to get back on track.
Yeah. Yeah. So I guess the question is, when would that spike actually occur, and would it be a spike versus a gradual increase? But the article says the news of an effective vaccine, which in turn means a potential light at the end of the COVID tunnel, would obviously be a good news for the economy overall. And then they say, the early week spike in the equity markets as a result of the Pfizer news provided clear evidence for that hypothesis. Strong economy is generally good news for the housing market, as people are more likely to buy homes when they feel good about their economic prospects. The idea that they can get back to work.
Tell you what, we're going to cut to a quick break. When we come back, we'll get more into that. Okay.
Yep.
Here's our first trivia question on entertainment. Who was the first a winner of American Idol TV show? All right. Call 888-912-1190. First caller with correct answer is going to win that certificate by Tanbella. Again, first trivia question is, who was the first winner of American Idol? Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. Edward Brown here along with Nam Phan of Pacific Private Money. First trivia question, who was the first winner of American Idol?
Is it Kelly Clarkson?
It was Kelly Clarkson. Very good.
Right.
Hey, one like a quick mention also. Do you know that Mountain Mike's Pizza in San Rafael, with the COVID and the shutdown and all that stuff, they are still open for pickup and delivery. And their pizza is phenomenal. I really, really like, man, I hate mentioning it because it makes me hungry. Every time I mention Mountain Mike's Pizza in San Rafael, it's like, I'm hungry, but it's not here.
What kind of pizza you get from them when you order?
I like pepperoni. That's my thing. I like pepperoni.
That's your go-to pizza.
That's my go-to pizza. Okay. So Nam, you were continuing on with your article that you were reading.
Yeah. So the last segment we were talking about the article from Inman News, what a vaccine could mean for the U.S. housing market and real estate. I ended saying that the article mentions a strong economy is generally good news for the housing market, as people are more likely to buy homes when they feel good about their economic prospects. However, there's a caveat. Strong economy also likely means interest rates may start to rise, and we talked about that as well. Although they're at record lows right now. Will they continue to go down over the next few months? They could. They're at record lows. I think this week they hit another record. But those rates usually they just don't go up drastically or dramatically overnight. So, like we talked about, the economy still has a fair ways to go before it's where it was pre-COVID.
This whole COVID thing is really taking a toll.
It is.
Businesses are shutting down. Here on 4th Street on San Rafael, every other business is shuttered. It's scary. It really is.
Yeah. Yeah. So so people have to feel good, especially if you these business owners who just had nothing but, it's been a nightmare roller coaster ride for them. 1 month you're transitioning back to having some capacity come back, and then the next month you're told to shut down. So how can you predict the future with that? So having a vaccine and hopefully distributing it quickly will help get back to some sort of normal pattern for these business owners, and I really feel for them. Yeah. The article goes on to say, how will a vaccine impact migration trends? And Rich Barton, who's the CEO and co-founder of Zillow, believes that the great reshuffling, those are his words, is here to stay. And what he means by reshuffling is the migration of people moving from congested urban areas to the suburbs. He thinks there's that trend of being able to work from home, wanting a larger space, is definitely probably here to stay. Although, I'm sure as soon as, somebody who lives in the city, they're thinking about moving, all of a sudden they realize, if they haven't moved yet, they realize, hey, there's a vaccine on the horizon. That really changes probably their mindset.
It does, yeah.
But, once this, train has left the station, I'm sure some people will say, you know what, I've Airbnb'd for a month out in Napa, away from San Francisco, and I really like it. So I do want to move.
Oh.
The urgency isn't as great. Maybe I'll wait until the summer. But you're always going to have that mix. And then I'm sure there are people who say, you know what, I don't like the suburbs. I really like city life, so I'm going to move back. So you'll see migration. The good news is, at least for us, for our own interests, housing is going to be strong. You're going to see continued sales.
Yeah, I mean, as long as there's activity. It's sort of like when people in the stock market, when people buy options on both sides, put calls. As long as the market moves a lot one way or the other, they make money. So in your case, as long as there's activity in the market, be it people moving to San Francisco, people moving out of San Francisco, it doesn't matter, because you're going to be providing loans one way or the other.
Yeah, and there's already trends in place pre-COVID where there's just built-in migration because of an aging population, and we'll talk about that in one of the deals of the week. So, for us, real estate activity is going to, we feel, continue to be strong for years to come for so many different reasons. This past year, though, it was for a very unknown reason, which was COVID and the subsequent migration. And, certainly the low interest rates weren't predicted this year. So we'll see that. And, there's another article that I'll share with you in a minute that also talks about the longer term trend of housing. But I think COVID is one of the reasons for the housing market boom this year. And there are a number of longer term factors that we'll get into in another segment. Since we're on the topic and we have some time before the end of this segment, we're talking about the long-term migration pattern. So I mentioned this deal of the week, or this case study, as we call them on our webinars. This is a deal of the week that we recently closed that highlights one of those trends we were talking about, which the migration trend of people downsizing. We talk about people downsizing from, in particular, boomers who have a lot of equity in their home and maybe are moving from a two-story home into a one-story because they're empty nesters and they don't need to have such a big property anymore. That's been one segment where we've been able to really provide value with our bridge loan. And we had talked about how many of these people were moving from one location in California to another location. What we're seeing more lately are people who are moving out of California. We're seeing more of those loans. And the deal that we mentioned yesterday was a couple who is moving from San Jose to Hawaii. And this is a loan that we did. It's actually a junior lien. It was a second for $900,000. That's a pretty big second lien loan. The value of this property is $1.8 million, which is a loan is a 50% loan to value, but they also had a first on it. So it was a $274,000 first. Combined loan to value is somewhere 60-ish%. So it addresses a few things. One is we can make loans to people who are moving out of state. In this case, we're just wiring the funds to escrow on their Hawaii purchase.
But you didn't cross-collateralize on the Hawaii house.
Not in this case, we didn't. We basically, they pulled cash out in the form of a second, and we used that loan for them to make a down payment on the Hawaii purchase.
The interesting thing is that even though you didn't cross-collateralize, they have a huge incentive to make sure that they pay off the loan, because 270 plus 900 is $1 million. What properties? They don't want to give up $600,000-$700,000 of value, especially when they're moving away. 3,000 miles. I get it.
Yeah, and that for us is risk we're taking. We'll talk about it more later.
Okay. Here's our second trivia question. You remember the movie Shallow Hal?
Yes.
Which it had its pluses and minuses, but I kind of liked it a little bit. Okay. What real-life person hypnotizes Hal into seeing people as their inner beauty? You remember that? All right. In fact, I think he sees him in the elevator, if I'm not mistaken. All right. Call 888-912-1190. First caller with the correct answer is going to win the tanning certificate. In the movie Shallow Hal, what real-life person hypnotizes Hal into seeing people as their inner beauty? And when we come back, we also have an email that came in. It says, when is the best time to get into one of your funds? Is there any waiting list to get in? All right, so that's we'll answer that question too. All right, stay with us. The Best of Investing. I'll be right back. Welcome back to the Best of Investing. Edward Brown along with Nam Phan. Let's see. In the movie Shallow Hal, what real life person hypnotizes Hal into seeing people as their inner beauty?
Tony Robbins.
Tony Robbins. Yes, you are 2 for 2. In fact, you're going to be 3 for 3 because I think the next one's a softball question or even a t-ball question.
I hope you're right. Did you ask that trivia question before on a previous show? I remember Shallow Hal one before.
Yeah, that could have been about 6 or 9 months ago. I figured maybe you forget by then.
No, that was a funny movie. Don't forget.
Okay, go ahead. Finish off with your deal.
Yeah. So that deal of the week that I was talking about earlier, highlights a few trends. One is, that people are downsizing and moving, but also there are migration patterns for people in California moving out of state. And we're seeing loan requests for people to sell their home in California and buy in Texas, for instance. We're seeing Oregon, we're seeing Washington State, we're seeing Reno. So not too far away, but in this case, this one was in Hawaii. And, I mentioned earlier that it's a $900,000 loan, but it's a second. And that might have piqued some of our investors' ears or potential investors saying, wow, that's a big second. Are you sure you guys, should you be taking on that kind of a risk? Because I hear seconds are risky. And we always talk about that. And we always talk about how not all seconds are created equal, right? Now, if this scenario were flipped, where they had a $900,000 first, and they needed a $274,000 second, you would say, well, would investors say, well, that's a smaller dollar amount. Isn't that less risk? Taking a smaller second. And Edward's shaking his head for those who can't see the video segment. And the reason why is, if you're stuck behind a big first, and you had to cure that default, you'd have to potentially pay the mortgage on that first, right, to not lose your position. Where if it's flipped, and in this case, the overall combined loan to value is low, the buyer's not going to walk away from, like you said, $600,000 in equity. Right. If we needed to take over that $274,000 first in a short period of time that we would hold the loan before foreclosing, if we ever had to get there, we would do that, because the upside is if we did have to foreclose and take the property back, we'd have, we'd also get the equity in that property.
Right.
But, we take all of these things into consideration, and the fact is these people are moving. They have a very, very strong financial incentive to exit our loan, to sell their house, to be able to get into that house in Hawaii. So, I just want to highlight that, we will be making more seconds for scenarios like this. But again, it has to work out. There's seconds where we obviously say no because it's a small second behind a big first, and we just don't want to take on that kind of risk.
I mean, it's prudent, man. So to speak. Prudent.
Yeah.
Yeah. I wanted to mention also. So, what do you think about Newsom pretty much closing the state down?
You know what? I have mixed feelings. First of all, just coming from him, and right after on the heels of him, being seen at French Laundry with a whole bunch of people, it's just you can't help but have kind of a sour taste in your mouth.
Well, they mentioned this on Armstrong and Getty, which I appreciated. It's not just the fact that he was unmasked, but he's with all these cronies, all of his rich people who were unmasked. So
right.
It's like, come on. I mean, it's not just him. It's hey, guys, it's supposed to be the whole shebang. And so I wonder how many people are going to say, you know what? Forget this. I'm just talking. If he doesn't need to wear a mask, I don't need to wear a mask.
Well, and that's, what you expect from leadership is you have to lead by example. But you know, messenger aside, you have to remove the messenger from the message.
True.
And, you know, I'm not a scientist, so, but I have to believe that our doctors and scientists, you know, who make recommendations are coming at with, you know, with facts and objectivity. I think it is important that we take the necessary precautions. I don't know if shutting down for a month is overkill, but again, I know that what we're doing probably isn't working or isn't enough. So somewhere in there.
The old herd immunity, you know, just kind of let everybody get it, get over it. And unfortunately, some people will die. You know, I'm not obviously hoping people die, but you know, it's like last year, right? When there were, you know, or the swine flu or Ebola, you know, one of those major, you know, H1N1 type things. They didn't shut things down, and that was, you know, that H1N1 was deadly.
Yeah, you know what I don't know is if they've shown that herd immunity works with the coronavirus, because I know they tried that in Switzerland. They didn't shut down in the first go around back in March, April, or May, and I don't know that it was effective. So they actually backed off of that for a while because they weren't recovering as quickly as they anticipated. So, you know, I just don't know the answer to that.
That's a fair analysis. Okay. You may wait a minute. You are a scientist and don't know it.
No. No, I know that I don't know enough to make my own judgment calls on that. So I'll have to lean on the intelligence.
Hey, and, you know, oil prices dropped because of COVID concern. I guess they're thinking there's not enough demand. I mean, I also heard this on the radio that there's this theory that it's not so much about the virus, it's about control and about turning this into a socialist system where it's like, you know, we're going to force people to get off the road. They're going to stop, you know, they're not going to allow you to buy cars that run on fossil fuels. And I mean, if you think about it, in what situation have we ever had where the government has told you, you cannot leave your house, you know, you cannot do this, you can do, you know, I mean, there's really been no authority before. And so if you think about communistic or socialist societies, what do? The government pretty much controls everything you do.
Yeah, I mean, you know, it's funny. I just read an article this morning about, you know, the Greatest Generation and how, you know, how are we as a society different today than during World War II, when actually they did force people to make sacrifices.
That's
like
true.
They had Wheat Wednesday or Wheatless Wednesday, Meatless Tuesday or something like that, where they said, you know what, we need to ration for the greater good.
Yeah, but that was because there wasn't enough.
Right.
That's a little
well, yes.
I know you're just bursting at the seams, but can I ask a trivia question first? And you can burst.
Yeah. Of course.
All right. You're gonna get this one. What was the mailman's name on the TV show Seinfeld? That's the easy one. Oh, come on, you know that. Call 888-912-1190. And in fact, you have to say his name the way Seinfeld would say it.
Oh, now I think I know.
Yeah, so the first caller with the correct answer, who says it the right way, wins the tanning certificate. Call 888-912-1190. Again, what was the mailman's name in the TV show Seinfeld? Stay with us. The Best of Investing is going to be right back. Welcome back to the Best of Investing. I'm Edward Brown, along with Tom Fauna, Pacific Private Money. Third trivia question: what was the mailman's name on the TV show Seinfeld?
Newman.
Newman.
Was that right?
And you said it that way. That counts. That was pretty good.
Newman.
Yeah.
Yay, 3 for 3.
Pretty good. Pretty good. You have one more article you want to share?
Yeah. So we were talking about earlier, talking about trends and how the activity for real estate activity this year has been on a tear or very strong, and mentioned some longer-term trends versus near-term trends. You know, near-term being people wanting to move out of the urban areas into the suburban areas, specifically because of COVID, and realizing that, you know what, if I have to shelter in place, I want to shelter in a larger place. This trend is longer term. So this article, is from Realtor.com, dated yesterday, November 18th. New home construction surges to post-Great Recession high in October, driven by rise in single-family starts. So the numbers, U.S. home builders started construction on homes at a seasonally adjusted annual rate of 1.3 million in October, representing a 4.9% increase from the previous month's figures. Permitting for new homes occurred at a seasonally adjusted annual rate of 1.545 million, unchanged from September. What happened? The upsurge in housing starts was driven by a 6.4% rise in single-family starts, as multifamily construction activity dipped once again, this time by 3.2%. I'm wondering, though, if some of these builders who build multifamily are also builders of single-family, and where they redirected their resources to building single-family. I don't know. Or did the multifamily developers just pause while builders like Lennar or some of these other ones, KB Homes, just to ramp up their builders? Probably that. The big picture, the housing starts report follows yesterday's release of the November Home Builder Confidence Index from the National Association of Home Builders. Index inched higher for the fourth consecutive month, demonstrating the upbeat outlook in the construction industry. Indeed, virtually every home builder is seeing rising sales as Americans look to leave urban areas for larger homes in the suburbs, only to find very few existing homes up for sale. Now, it'll be interesting to watch home builders to see if they slow down some of their plans for larger homes, because they're usually, at the forefront of housing trends and behavior. And if you see home builders backing off of larger homes, that means they're seeing less demand for people, potentially moving from urban areas to suburban. It's all based on consumer preference. So it'll be interesting to watch that. But their outlook is very, very bullish. They're building. So, the longer-term trend, is that there's an undersupply of housing. And, we've seen that here at Pacific Private Money, which is why we launched the North Star Capital Fund earlier this year, back in July, to address the shortfall, the lack of supply of capital to builders, infill builders, not the Lennar Homes of the world, but those builders who are building, 20 homes at a time, or 10 homes, whatever that number is. They're sort of your mid-range local builders. That's an underserved market where, we're very bullish on the North Star Capital Fund and being able to provide capital to these builders. And we'll touch on all of these funds, I think, in just a minute.
Before we go to our break, I want to ask you an email question that came in. It says, when's the best time to get into a fund? Are there waiting lists?
Yeah. So really, for any of the funds, if you are interested in investing in a fund, if you're ready to invest, you should invest. The reason why you might hold off on investing is, the question is always, how quickly does my money go to work? How soon do I start earning interest? And, that really varies by the fund. And within each fund, it varies by the number of loans we have in the pipeline that require, new investor capital. And so that, again, it can vary from, and as little as 1 week right now for some of our funds to anywhere from 2 months. But the reason to not wait is we deploy capital on a first invested, first deployed basis. So in other words, if we told you we probably won't be able to deploy your money a month from now, your next thought is, well, why don't I just wait a month and invest? The problem is, as I just mentioned, it's first invested, first deployed. So between now and a month from now, we could have 10 other investors come in and invest, let's say, a total of $1 million, $100,000 each person. Well, you come in 30 days from now and you invest $100,000, you're now behind those 10 other investors. So it's not like we can necessarily hold your place in line. Although people have been interested in the Southwest Note Fund, which right now there is over a month, I'd say, wait period. Yeah. But one of the options we're putting out there to investors is, if you want to invest in any of our funds, and there's a long waiting period for, in this case, North Star Capital Fund, the Pacific Southwest Note Fund, or the Pacific Private Money Fund, there's one option, which is to potentially invest in our Freedom Fund because it has, immediate liquidity. So if you needed to invest, you could redeem very quickly, and we would consider letting you invest in the Freedom Fund, and then when the any of the other funds, have the demand for the capital, you could transfer it into one of the other funds. So far, with the
I was just saying that we've actually had some people look and say, well, right now my money is earning practically zero in the bank.
Right.
So it's not that big a deal to invest in the fund like the Southwest Fund and let it sit there for a month not earning. They're expecting.
Right. Yeah, and we're allowing people to invest in the Pacific Freedom Fund right now until the Southwest Fund has the need. So, really talk to us if you are interested in investing in the Southwest Node Fund, knowing that it is more than a month wait time. Talk to us because we may be able to have you invest in the Freedom Fund and then deploy that or transfer that money into the Southwest Node Fund in a month's time. You wouldn't lose your place in that case.
Okay, how do people get a hold of you if they have any more questions on this?
Yeah, they can give us a call at 415-883-2150, or they can go online to www.pacificprivatemoney.com, and we're happy to talk about any of the funds that we offer and the different ways you can invest. And to your point too, a lot of people will say, well, geez, I don't want to wait a month, but then you ask them, where's your money right now? What's it sitting in? Yeah, it's in my bank account earning 0.01%. Well, you keep your invest now and just wait out that month until we can deploy it.
Yeah, because especially like with the Southwest Fund, the minimum preferred return, the preferred return is 9%. So if you went a month without interest, but you still earn 9% for 11 months, that's going to more than make up for the 1 month of no interest.
Absolutely, and with all of these funds, once your money is deployed, it's deployed. It's working for you. It's not like you go back and it's back into an account that's earning nothing again. So give us a call. 41.
Oh, sorry. Well, I was just saying.
Oh, yeah.
With the Southwest Fund, they're longer-term loans, so they're probably not going to completely pay off and quickly. Or is there going to be another loan to fund? These loans are a little bit longer term. Say out your information one more time. We're going to cut to our last break.
Yep, 415-883-2150 or www.pacificprivatemoney.com.
All right, stay with us. Best of Investing will be back with some closing comments. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money. No trivia question, but Nam, you have another deal of the week case study you want to share with us.
Yeah, this is a case study that we talked about again on the webinar we had yesterday. So for those who attended the webinar and are listening to the radio show, sorry, I'm rehashing an old story. But actually, if you missed the webinar yesterday, you can still watch it. So if you go to www.pacificprivatemoney.com, you can register to listen to the recording. So we make that available after each one of these sessions so that people who missed it can go back and watch it. So this was another scenario that we're seeing a lot of lately, and it's a big loan, $3 million against a $5.1 million purchase. This was a couple that were buying a home in Saratoga. They don't need us. They didn't need us when they went to purchase. They were highly, highly qualified. I think their FICO scores were mid-700s, high 700s. And they were essentially they made an offer on a house. They had a loan in place. And then with just a few days left before close of escrow, their bank said, hey, we need more time. And if you know what's going on in this real estate market and the refi market, with interest rates being so low, banks are just flooded with applications, loan applications for purchases, loan applications for refinances. It's just taking longer to close on a loan. Now, if you're trying to buy a home in this market, then you really can't afford to make an offer with a long closing time frame, because you're competing against other offers who will say, we'll do a quick close, we'll pay all cash. So those are two competing agendas. The bank, it's going to take a long time to close your loan. Real estate purchase, you want to be able to write in your offer that will be able to close quickly. So in this case, this couple simply ran out of time. They were up against the clock. They had a $150,000 deposit that they were in jeopardy of losing if they couldn't perform on the closing time frame, and their bank said, we need more time. So they came to us actually on a weekend, and they said, hey, we need to close by this coming Thursday. And we got the application in over the weekend. We drew docs on a Monday, funded I think on a Wednesday, and closed on a Thursday. And you know, that's when we talked about earlier in the show why we bought lunch for two of our processors. It's because they don't have time literally to get out of their seat sometimes to be able to do these loans, because again, you know, we're under tight timelines. You know, but as an investor in Pacific Private Money for loans like this loan's going to pay off really fast, and this is a loan we would put in our fund because no individual investor would want to hold on to a loan that only holds for 45 or 60 days, because that's how quickly this loan will turn around. So anyway, there's more loans like this. These are the loans we do at Pacific Private Money, and I'll give out our number one more time. It's 415-883-2150. Go to our website, www.pacificprivatemoney.com, and we could tell you deals of the week like this until we're blue in the face.
Best part is it's no load. There's no fee to get in. There's no fee to get out. Every fund except for the Freedom Fund has a 1-year hold. Freedom Fund, there is no 1-year hold. Minimum investment in all the funds, well, actually in the Southwest Fund and the Pacific Private Money Fund is $50,000. North Star is $100,000. Minimum investment in the Freedom Fund is $250,000. Right? Okay.
So real quick, on the Freedom Fund, it is a 1-year hold, but there's flexibility as fund managers on the redemption fee or not covering the penalty.
I'm hearing static. Okay, here we go. Here's our thoughts for the day. Someone broke into my garage and stole my Limbo bar. Oh, how low can you go? And I thought I spotted Superman twice yesterday. Turns out it was just a bird in a plane. All right, tune in yesterday. Tune in next week to the Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.